conference are not available for US residents for those regulatory reasons. So please do note that. Now just bear with me one moment, guys, while I just bring this back down, and next I'm going to pull up my chart over here. Just get that big. There we go. Now this is gold. This is the gold chart, and I'm not going to start with gold. I'm starting with, we've got a few things that we want to talk about today, and I'd be really interested to hear your views. And in fact, the first thing I'm going to say is, or the first thing I'm going to ask is, you know, obviously we've got this Greek deal overnight. Do you think that now gives free rein for the euro to rally into the end of the year? If you guys just want to write down maybe yes or no in your chat box or your Q&A box, would just be really interesting to get a sense of what you guys think will be the direction for the euro going forward as we go. If those of you who will have been trading it and looking at it the last couple of days, or the last couple of hours, will know that 130 is so near yet so far away as well. So it's all quite interesting. But if you guys can just write quickly what your views are on the euro, whether or not now that Greece is out the way, whether or not we can rally. It's always about Greece, isn't it? So Jan has said that there's no rally. Larry's also said no rally. Ahmed has also said that it's already priced in. Very, very good point there. You know, there could be a limit to the rally that we see in the euro on the back of this Greek news, purely because it seems like we've been rallying for the last 2 weeks on the back of the expectation that Greece would be sorted out. Now, people aren't. I don't think the market is really reacting to the fact that, well, maybe the European authorities, along with the IMF, didn't quite reach the deal regarding debt sustainability for Greece. They didn't reduce Greece's debt burden. Remember, all they did was reduce the length of what they primarily did was reduce interest rate payments and pushed out some debt repayments from the rescue fund, but they certainly didn't. No one's taking a haircut. No one is losing any money on their Greek debt holdings. They're just going to get it back a bit. It's going to take a bit longer than thought to get it paid back to them. But there's no actual reduction in the debt pile. So that's a key thing there. And let's just, on that note, let's just start with euro. So some really perceptive observations from you guys. You're obviously kind of reading a lot, looking at the markets, looking at price action very closely, and that really is key in these markets. There's a lot of complicated things going on from a fundamental perspective. When you talk about debt restructuring or potential debt restructurings, when you talk about things like whether or not debt restructurings, or whether or not investors are going to or whether or not there's going to be changes in how Greece is going to pay its money back. You combine that with elections in Spain, which maybe suggests that there's going to be, there could potentially be referendum on independence there. Combine that with everything else that's going on the growth side of things, the kind of split between the core and the periphery, etc., etc. Sometimes it's good to go back to price action just to see, well, where is price going? How are the markets reacting to this? And this is an hourly chart up here. I just switched it from the daily. And as you can see, quite a decisive move away from that 130 level. So this is just an hourly chart. So just really since the UK has come in, we've really rejected that 130 level. Now, right now, that is as expected. We still think that around about the 129.50 mark, maybe even right down to this kind of 100-hour moving average here at 129.25, they'd still maybe be considered quite good buying points, entry points. And the reason why, so in the medium term, we still see, the potential to rally, and we're still, fairly open to another move higher or another attempt at 130 in the short to medium term. I mean, overall, do we see it rallying? Do we see us getting to 140? Do we think that life above 130 is going to be great? No, we don't. That is not true. There's too much on a growth basis. There's still the prospect of of so much that won't happen. Going ahead there, that's going to be or so much disappointment when it comes to the growth forecast for Europe, when it comes to fiscal targets, and also when it comes to just overall kind of sustainable debt movements that we think that we could potentially fall. Added to that, we think next year is going to be a very tough year for the euro, largely because of huge debt issuance schedules for Spain and Italy. They have enormous big bond redemption sales. They've got, I think Italy has over 200 billion euros worth of debt to sell next year. That is a huge amount. Likewise, France isn't fantastic either. And we think from kind of January to February next year, we're going to start getting fiscal targets. And when that happens, potentially we could see those fiscal. When that happens, potentially we could see fiscal issues start to kind of fall by the wayside slightly. If that happens, if we see missed fiscal targets, then we could get a bit of get kind of spooked slightly at this level. So again, we're testing fairly good support here now at 129.50. We've seen the dollar really get its groove back this morning, but the euro is one of the weaker currency. Oh, sorry, bear with me one moment. Euro is one of the weakest currencies today, just in the very, very short term. Sorry, just bear with me 1 minute. I'm just pulling up my chart to see where we are. I'll just drag it over, just show it to you. This just shows, we're kind of in consolidation mode, but this is the daily, so this is just the cross rates and how they're performing against each other right now. As you can see here, the Canadian dollar, the Aussie, the Kiwi, really doing fantastically well. I'm going to look at the Aussie in a bit more detail. They do tend to be the more kind of risky end of FX, but they really are doing well. Now, we've seen kind of all currencies, that's quite unusual actually, do quite well against kind of the stocky and the knocky. They are certainly, most definitely on the back foot. We've also had euro and dollar a bit more mixed. Cable, again, a bit more mixed. We had some fundamental data out of the UK I'll talk about in a minute, but overall seeing some great gains there in the CAD, the Aussie and the Kiwi. The Canadian dollar very much reversing its down move from yesterday after that announcement that their bank governor Carney is going to leave because they're going to join our bank. He's going to be the head of our bank. So that's kind of the key thing. Okay, so we've looked at the euro here. We would say that in the short term, we think it's a bit of a buy on dips. In the longer term, we think that we could... in the longer term, we think it's going to struggle. Life above 130 is going to be a struggle, and certainly if we do get above 130, 131.75, let's just take a quick look at this daily chart. That's this 131 kind of 75 level. It's the double top from September, October. That's going to be really, really tough resistance. Right now, if you look, we're completely stuck in a range, that 131 kind of 30 to 75 level, or 50 to 75 level, 126 now, so just below 127 there at the bottom of the range. Right now, we're getting kind of close to the top of the range. What would be quite negative on a longer term basis, however, is if we do fail here. So if we fail around 130 and turn lower again, it would suggest that we've got into kind of a bit of a habit of lower highs, and that could potentially be quite negative and may suggest a break of this kind of 127 or a significant break of this 127 level. So, overall from the whole year, so if we think of this as being the top from a year ago, this being the low from this year, we are smack bang in the middle. Like we really are. It just kind of shows kind of the year that we've got. We've trended lower for the first kind of, more than half of the year, 7 months of the year, and then we really got kind of our groove back. But since then, it's been quite hard to really sustain that rally from those 126 lows. We're going to see if we're going to give it a go again. But remember, even if we get above this 130 hurdle, this 131.30-ish level, 30 to 50 level here, massive, massive resistance, and it could easily be a triple top. So that is worth watching out for. Now, the other thing I want to show you is cable. Now, the pound has been kind of quite volatile recently. It's as you can see, this is the daily chart. It's kind of carnage. It's so much more volatile than what we've seen in the euro and some of the other crosses. So what we've seen is, you know, a really nice, what looks like a really nice downtrend there. A series of lower highs. We've also got a series of lower lows, as you can see. And right now we're at quite an important level. So if I just put this level here and just change this to this segment. As you can see here, we're kind of getting to this downtrend or this channel resistance, so downtrend channel resistance really. And if we break this kind of break above 160.30, now we're taking a lot of time about it, but if we get above there, then we really have kind of it really does open the way then to kind of a move towards 161.50, and that of course, if we can get above there, would negate this potential downtrend that we're in right now. Now what we may see is just a little bit of what we could potentially see is you know, this pair is going to be very reactionary to, or going to react very strongly to what goes on with the dollar. So right now we've seen kind of last week we saw the dollar sell off quite a bit. Whether or not we continue to see that will be quite interesting. But do watch out for here, because right now we're at a very important level. So I can't, until we get a significant, I certainly wouldn't go long here in cable until I got a significant break of this 160.30 or 40 level. I think we could actually see cable kind of move up and down a little bit, be a little bit volatile in the next you know, in the next few hours for the rest of this session. People are going to be looking for a daily close to establish more short-term longs before they're kind of willing to kind of jump on board. But certainly, if we do get above this level, then we would suggest that 161.50 level is the next target after that. So the other thing I promised to show you was Aussie, because Aussie's just been great. Let's take a quick look at that there. As you can see, that kind of move around about one. Oh, let me just change my. This level here has been really stiff short-term resistance. Now we did get above that 104.80 level earlier. We've since kind of backed away from it, but in no mean way. It doesn't suggest, or in no kind of major way, it doesn't suggest that we're falling from a cliff or that we've lost short-term momentum here. The one thing that we'd point out is that we do seem to have just maybe trading sideways just a little bit. The momentum indicators suggest that, and obviously momentum indicators can be lagging indicators, but right now they're kind of both moving in conjunction with each other. Let's take a look at the daily chart. Now that small break here, I draw your attention to that, which is the break of the Someone's just asked a question about cable, so you wouldn't short cable. I believe that at the moment, you know, cable, there's been a few things on its side. Firstly, obviously, the yield advantage seems to be in cable's favour. Secondly, you know, obviously the GDP is out of the way. Yes, there's quite weak data, but I certainly wouldn't really do anything cable-wise until we get a significant break. I certainly wouldn't necessarily short it here. I think it's probably going to be a bit of a sell on rallies in the longer term, but in the short term, I think there's still further to go. And the reason why I say that, let me just quickly go back to my cable chart. The reason why, as I said that, you know, just on a longer term basis, it looks like there's more upside. It doesn't in any way look overbought. Even on a shorter term trend, doesn't look overbought. As you can see here, it's been quite a nice rally higher. That support level, 158.50, very, very strong support, really bounced off that level. To me, it seems like, certainly in the short term anyway, the bulls are going to be still on the side of the pound. Now, if we do reject this level, as I said, it's all about levels, this kind of channel level. If we do convincingly reject that level, then I'd probably think about entering a short around about the 160 level, maybe even 159.90, and then looking for a move back towards that 158.50 in the short term. But right now, I think with cable, there is no prevailing trend. You know, potentially there may be if we break below 158.50, but I'm going on price action. I think that the outlook is quite difficult to read. I think it's quite difficult to tell what's going on and where and how. So because of that, I would certainly be looking for I'd be certainly looking at, what's happening. I'm just going to follow price action. I'm not going to just take kind of punts, if you like. Okay, now the other one I was talking about was Aussie. Aussie had a really good move higher. It's testing this 104.80 level, as you can see here. That 104.80 level really quite important because it really opens the way back then to this kind of break of 106 or a move higher towards 106. Again, a bit like Euro, we're very much stuck in a range with the Aussie. Right now, we're kind of trading quite bullish fashion, trading towards the top of the range, but we're certainly not. We are certainly not trending in any way, shape, or form. Now, as you can see, we've got above a huge cluster of SMAs. Last week we got above the top of the daily Ichimoku cloud. These are all bullish signs. So let me just bring in that chart quickly. Hang on. Just bear with me. As you can see here, this is the chart, the Ichimoku cloud chart. Break above the top of that Ichimoku cloud, kind of broken out of its near-term range. That is a bullish sign. So the signs are kind of pointing towards some further upside. Likewise, we've got this break of the daily. We've got this kind of bullish crossover, the daily MACD. And just looking at it even from an hourly basis, it doesn't look like we're in any way overbought at this stage in the Aussie. So there could be some further upside. Now, this is what we've said actually in our Q4 outlook. We did say that we thought, we'd probably trade in a range between about parity and 106 on the upside. It certainly doesn't seem to be any major drivers there to push us higher. The Aussie, we know the domestic fundamentals are quite weak. The Reserve Bank of Australia seems quite willing to cut interest rates going forward. Likewise, China, yes, it's picked up, but there's some other quite negative signs quite negative signs of things. Fairly negative signs coming out of China. We've had quite weak trading on its stock market, etc., etc. So we can actually end up seeing ourselves, maybe trade just within this range, we think, whereby move towards kind of 106 is going to be sold, and then it's going to be bought around 103. Now, obviously, for those of you working on much shorter time frames, then this 104.80 level, so just before we get to 105, these big whole numbers, they're acting as very, very good resistance levels. That could cause a bit of a sell-off. Any move back towards kind of 104.50 to 60, that could actually be used as a buying opportunity for short-term bulls trying to jump on the back of the trend. Now, one thing that we would say as well is that sometimes towards the end of the year, it's been quite a tough year. So any sign of a trend or any sign of a markets really being directional could be kind of jumped upon by the markets. That seems to be quite an important or quite a big kind of move. A big theme really in the markets that right now we're still quite constructive on Aussie unless we get kind of a clear rejection of 104.50 or 104.40 or 35 to 40, sorry, which is these lows here. Then we would probably be slightly more concerned and probably look to establish some sort of short for looking for a move back towards 103.50. But right now we probably would wait to establish a long until we got above 104.80, maybe a daily close around about that 104, 105 mark. That's going to be key. So this 104.80 level really is the level to watch. The other thing that I want to point out to you guys is Euro Sterling. Remember, Euro Sterling, those of you who joined us last week, it was at quite an important level. It managed to break above its daily Ichimoku cloud. Now, this is the daily chart, so as you can see, a bit of a rejection of that 81 level here. Just look at it from a daily chart and you see a bit of a different story. You see it running into resistance. Obviously above here opens the way to kind of 81 to 60, which is those highs from mid-October, so highs from over a month ago now. So we are at quite a key level. But the other thing I would point out is that we do have a really nice, bit of a nice trend line coming up here. Now, it's not perfect for those of you who are really into your technical analysis. It's certainly not perfect, but there are some bullish signals, as I said. We're still quite convinced, quite constructive on Euro Sterling. Take a look at this daily Ichimoku cloud chart. We're above the cloud, just about. So that for us is like a bit of a tentative uptrend. We'd certainly maybe look to go long if we do break above that kind of 81 level, if we get a daily close above 81. Right now, we think we're trading sideways a little bit. we're not really trending, that is for sure. This move up towards kind of 82, that's a really key significant key level, but we think potentially we could do it if the Eurozone crisis does manage to hold fire a little bit. Obviously, you know, what happens with cable does impact that, but if we see euro dollar start outperforming cable, that could be quite a good move for that. So certainly worth watching out for there. As I said, quite a lot of resistance. 200-day moving average comes in right about where we are now. Let me just clear some of these lines. So that's another reason why this 80 level, or just below the 81 level, is really acting as key resistance here, causing a bit of selling pressure. Which is what we would expect. And obviously, on that move towards 82, we think that could potentially attract some selling pressure it has in the past. So if we can get above here, get a daily close above 81.80 towards 82, then it could attract some short-term buyers looking for a move towards 82. But then we'd probably be looking to get out. So still a bit like trading the range. It's narrowing your time frames. You know, those people who will be looking for longer term trends to follow will probably be looking for a break of this kind of 81.80 level. Likewise, if we do reject this level and kind of drop down towards this, let me take a quick look on the short term chart. Look down towards kind of 80.60, 80.50. That's kind of going to be the maybe the trigger that says to us, hang on, this is something more sinister. At the moment, it just looks like a very normal pullback. Okay, the other thing I want to show you is gold. Gold has been pretty interesting. I know a lot of you really like gold. A lot of you follow gold. Trading sideways. This is the hourly chart. Trading sideways. Interestingly enough, yes, we've fallen a little bit. The MACD really corresponds with that high there. So this kind of sell-off a little bit has been followed by the momentum really just falling off. So one of the reasons why the momentum has gone is potentially down to, you know, the main reason could potentially be the fact that we've, you know, that we've gone too far too fast. It was looking very, very overbought here. There weren't too many major drivers. Obviously, that better news coming out of Greece did help spur gold there. Someone's asked me to look at dollar yen, and I will do in one moment. Let me just finish with gold. This is the daily chart. Again, it's looking quite messy. There's no massive direction in the market, I think, which really gets reflected in gold. There does seem to be the will to push it higher. Obviously, the market doesn't really like it below 1700, as you can see here. Very decisive bottom there, decisive move higher. But we are moving up in kind of incremental steps. No real trend of note. Again, trading quite a range. This 1750 level is going to be key. Obviously, if you break above there, then potentially some people will be interested in looking at longs all the way back for a test of that kind of 1800, 1890 level. But remember, you know, could this is a triple top here, this 1800 level. It's going to be enormous resistance. We're going to have to see a massive change in the overall risk environment, we think, before we get for us to get kind of break above there. And we just don't see that from a fundamental driver. To get us above 1800, we think it's going to take more than just price action and actually be some sort of fundamental driver, maybe some more commitment to QE from the Federal Reserve. Their meeting next month on the 12th of December is going to be absolutely pivotal. All of this stuff is going to be really important for gold, for the gold price. Gold, as I said, the ultimate QE3 trade. So any sign of easing is going to be impacted. It's going to impact the gold price. Someone's asked me to look at dollar yen. Very, very happy to do that. Dollar yen's been quite interesting. It has obviously kind of rejected that 83 level. This is the daily chart, but it is being picked up on dips. So this is the daily chart, as you can see here, kind of a mix between buyers and sellers today. Just look at that last candlestick. Looks a bit like kind of a long-legged doji to me. You know, we're still, you know, the MACD is just turning there, so it's following price action, suggests potentially we could see a bit of a deeper pullback. The low today has been 81.80. Let's take a look at the hourly chart. That really shows you kind of where price action is. Any pullbacks towards 81.80, they're really getting bought into. So there is buying interest. People are looking to buy on dips. And that's how I see us today. I don't really see us going one way or the other. I think that, you know, we're still quite constructive on some of the risky currencies, certainly the short term anyway. Dollar yen is a trend that everyone loves. There's a lot of people wanting to jump on that. On a short term basis, though, that rejection of the kind of the 82.80 level just before 83 has been really convincing, I would argue. You know, we've had a nice kind of slope lower, and right now we're in the middle of a bit of a mess. We're kind of consolidating, moving sideways. Again, you know, the 200-day moving average should act as fairly good support, 81.75. We were seeing buying interest below there, above there, so we would expect around about the 82.80 level for it to attract some good buying interest. Obviously, there are some risks. For example, today we've got durable goods orders coming out of the US at 130. That's going to be the key risk, and the reason why is that it may focus minds on the impact of the fiscal cliff, one that's having on the US economy, and that's because durable goods are a great way to show kind of investment expectations, etc., in an economy. So when the political outlook and the tax outlook is very unclear, what you can potentially get is businesses not investing, and that is shown in the capital goods order. So right now the market expects a slight decline. We think the risks are to the downside when it comes to October durable goods sales. Now, what would that mean? If that happens, we could potentially see dollar yen start to turn lower, for that to kind of weigh on treasury yields as well, and for the yen to attract some buying interest, safe haven buying interest. So do watch out for that. Obviously, a break below 81.50 would be a very bearish development in the short term for this cross, but we do think that in the absence of a negative surprise in US durable goods orders, that a move towards that, traders will come in and buy around that 81.80 mark like they did earlier today. Okay, anyone? Someone has just... Some question here, very good question. Some analysts are forecasting, this is from Ahmed, some analysts are forecasting a big upside move in dollar yen in 2013. Do you see that possibility? Well, I think from a fundamental perspective, there is the chance of a big upside move in dollar yen next year, and that's because we've got political elections next year. We also have next month, and we've got a change in governor at the Bank of Japan. And right now, you know, the Bank of Japan is so dovish. The only thing really they can do to strengthen their economy is to weaken the yen. It's kind of their last tool. So, you know, if they're going to keep monetary policy incredibly accommodative, throw more stimulus at the market, which is what the market expects next year, then what we could see is a more prolonged move in the dollar yen. However, what we've seen in the past is that dollar yen actually becomes slightly more resilient than, dollar yen, or the yen is more resilient than that. Obviously, the big risk or the caveat to a strong upside move in dollar yen is some massive risk-off event which would drive safe haven flows into dollar yen. So we would say that there is a very good chance of a large move, maybe towards 85 in the medium to long term in dollar yen, and that's because just it seems like the political and fundamental backdrop of Japan, whereby it's got very large debt load, politically very, very unstable, seems to be catching up with the currency at the moment. Okay, if anyone's got any questions, I'm happy to take a couple. You've had some good questions so far. Keep them coming. Actually, one thing I was going to ask you guys, if we do an outlook, so a 2013 outlook, do you prefer to get it in December or do you prefer to get it in January? Because we're just trying to figure that out now. You know, whether or not you prefer to plan earlier enough. If some people prefer to get them in December, so Larry prefers to get them in December, that's good. Anyone else, if you prefer to get it in December or if you prefer to get it in January? I think my view is that it's better in December, and that's largely because it gives you time to read it over the holidays and to really digest what we mean. In January, I think kind of you're worried about January things then. So seems like it's a lot of you want December, so that is good. That is very good. I'm pleased about that. Okay, guys, and I'll talk to you more about that nearer the time. Basically, we're going to be releasing ours. We're hoping to anyway, middle of December. I then have a bit of prolonged Christmas break, but I'll talk about that later. But okay, guys, if there's one question, I'm happy to take one more question. Okay, guys, it doesn't seem like any of you have questions, but thank you so much for joining, and please do join us again next week, same time, same place for more. You've been great. You've been really good questions today, and thank you so much for joining. So that sounds good to us. Okay, everyone, thank you so much. Bye bye.